wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hi, good evening, good afternoon, everyone. So I muted my mic just now. Welcome to M Plus Weekly Highlights this week, and I'm your host today. I will be sharing you with you on the weekly highlights. And today, let's see what is happening in the market. I think it's pretty fun to notice that most of the stocks are actually down. So maybe you can talk about the market first before we go into the sectors and stock pickings, because you can see a lot of the stocks are down and a lot of sectors are in a negative tone as well. So what is happening in the stock market today? And basically in the US, I think everyone would know that there is a lot of negative sentiment out there. So let's check it out. The Dow Jones last week itself, it has started to fall, and this is not a good sign. On a short-term basis, we are expecting this to continue even further. So let's say we are anticipating it to go down towards the SMA 200, which is near towards the 33,000 level. Okay, why is that possible? Okay, so if you extrapolate out since the start of the bull market, which was in March last year, and it has went up so much, 94% towards the current position, and it has not really been collapsing or pull back significantly. The nearest or the most significant pullback during this period of time is around 9%, which is it has fallen to near towards the SMA 200 level. Okay, so this is around 10% of pullback. But what about these days? What is the 10% pullback? It will be around 32,000 level. But for sure, I'm looking at what we are saying here, the SMA 200 level, which is near towards the 32,000, 33,000 level. So that is the point that I'm monitoring for the Dow Jones to pull back right now. Okay, if you have drawn, the trend line here, we can expect this to have some support, right, for a very short time. But if it is falling below this trend line, then I would say that there is a further chance of correcting towards the 33,000 level. So that is the outlook for Dow Jones. And this sentiment on last Friday has bring us towards today's negative sentiment of stock market right now. And everyone must be shocked why is after the Selangor or Klang Valley has been going into the phase 2 and we are still in a negative tone in the stock market. So I believe what we call is the buy on rumor, sell on fact kind of thing. So people anticipated this to happen on the recovery phase 2. And right now, since that it has already been being in the phase 2, and that is where we are looking at a sell down phase because of the sell on fact. But I would say that this period of time is also because it has gone after the August period of reporting season, and there is not much of catalyst out there in September month. So we are waiting for a good chance for us to locate where is the next possible support and where is the place that you can anticipate a good buyback. Okay, so my idea is that it has come up from the 1534 level on the FBM KLCI. It has pulled back below the 1578 level. So the next possible target that I'm looking at will be around the 1555 or 1552, which is around the 1550 level. So there is a very good chance that this would continue to fall further, pull back further. And when it happens, then only we will monitor for a good potential rebound mode, and we try to time it from that point onwards. So for the time being, I think it is very likely that this will continue on the downward trend for near term. But until it is able to rebound from the 1550 or 1530 level, this range, I would consider that as a good support range for us to monitor for a rebound, because that is that time we will be entering what we call the budget season, and all this Malaysia plan will be coming out, and that is the time people will start to anticipate things to happen even more in a more vibrant manner. Okay, so I guess that is just the idea about the stock market at the start of today. Okay, this week. But what about sectoral wise? What is actually making a big hoo-ha here, big drop here? You can see that it is the healthcare. Healthcare has been dropping 1.3%, and near towards the lowest point is 1.9%. Sorry, 1.8%, I think. Yeah, 1.83%. So what has happened in healthcare is that a lot of people would be talking about Harta Lega's AGM, and the briefing itself, they have talked about some of the ASP is not really catching up and even falling further, and raw material price is higher, oversupply situation, and all these are actually impacting the glove sectors, the glove companies. So you can see that Top Glove being sold down, IHH sold down, Harta, Supermax, Corsan. Okay, so before we move in further to other sectors, I think one key point that in today's market is that after you can very clearly see that after the reporting season, the sectors has been sold down. Okay, so people have been digesting all this earnings report, and people are taking some profits off the table before moving into end of this month and also the budget month, and also moving into November month, which is the reporting season again. So that is how they position themselves, and therefore today's market is not as great. Okay, but okay, let's see what we have today for our stock picks. Okay, but before we go into that, maybe we can do some housekeeping here. Maybe you can you can click on the like button. You can share this video and share this video out. If you are a sharer, then you are able and eligible to ask a question later on. So if you have already have if you have a sharer or you have a like in our video, then perhaps that would give us a chance for me to review whatever that you are going to ask later on at the end of this session. Okay, near towards 1 p.m. Then we will start the Q&A section. So for now, please share this video out so that you're eligible to ask a question. Okay, so I wouldn't take every questions because a lot of times everyone would be asking a lot of questions. So right now I would choose for those who have asked questions, and so for those who have shared it out, share this video out, and I will take that opportunity to take a question. Okay, so before we go into why do we select Okay, wait, hold on a second. So for daily picks, what do we have here today is definitely we can't go away from the tech counters. So we have put in KGB, we have put in Amilus. These are under two tech companies. We have also put in Fajar. Fajar is related to construction sector. Why do we put construction? Is because we believe that since most of the states will go into phase 2, that will also bring up a potential construction sector run in the near term, okay? Because they can start their operations right now, right? So that would give them an opportunity to get some earnings in, at least for the next quarter. Okay, so that is the whole idea here about the construction sector. And other than that, we also put in MSC and also Unicop. These are under the metal related and either metal related or building material segment. So these are very exciting. I would say that it is not it is not a mainstream of sectors that people will look at. But again, when construction sector starts to move, then building material segments will start to move as well. So that is the whole idea here behind why do we choose this kind of stocks. Okay, so if you, in order to look into technology sector, you can actually monitor technology index. And where is the technology index right now? Okay, earlier on we did mention about the peak here, and also it has started to break out a peak, and then it pulled back, and then it continues to trade higher. So right now it is hovering within a sideways ranging market again, but it is still at least positive and at least one of the strongest sector in the stock market. So technology is certainly one sector that you can't really leave out in your portfolio. I believe that throughout the long period of time, you will definitely gain more than losing more in tech counters. So perhaps you have to monitor this as a symmetrical triangle formation and wait for the flat formation breakout. And our initial target was, this was sort of a wedge pattern, a channel, downward channel pattern, and it has broken out. So we can roughly use this and to extrapolate out perhaps towards 100 points for technology sector. So that is the whole idea here. We are going to wait for potential rebound play and also breakout play in technology stocks. Okay, so that is the whole idea behind why do we choose technology related counters. And Keen and also Hong Seng and also SaiPark, those are some of the counters that we think is still uptrending, and they're under the consumer electronics. They are still having a very cheap PE, and therefore we want to position ourselves. But today, although we have put in, but it didn't really trigger us. It has not performed a breakout yet. So we let's see how does it perform over the week. Okay, so let's see how does it perform over the week. Hong Seng, also we have put in, but it didn't trigger anything. It's still uptrending counter above 2 ringgit level, pull back and tried to rebound again. But overall, it has nothing that shows that it has a negative trend yet. So we will continue to monitor this, and it is still uptrending. So that's why we continue to monitor and follow through on this counter for this week. How about SaiPark? SaiPark is because there is some news related to solar projects, and also we believe that it has been going down very much, steep enough, and form a base. And right now it is, trending, potentially trending higher from this point. So that is the whole idea here. We need to tap along with the build up of the start of new uptrend, and this is where you have a lower risk section to enter. Okay, so it is already downward trend early on, and then it moves sideways, and then it has made a breakout, pullback, and continuation pattern. So this is what we like about the stock. So right now it is definitely rounding bottom and potentially looking out for a new breakout mode from this one. So that is just the whole idea about what our daily picks are for today. So our directions are very clear. We have a recovery trend such as Fajar. We have recovery theme of Keen. This is under consumer electronics. We have the recovery theme of the building material segment, which is MSC Unicop. We have this Hong Seng and also SaiPark, which is tagged along with sort of building a recovery team play, but definitely we need to monitor for the trend and to decide what to put in. So these are the 8 counters that we have put in for today. But I think most of you would have known that today's market is bad, and most of them are triggered, but it is not able to perform much higher. So let's see on how can we move on from this point onwards. So like for instance, KGB did a very good breakout, pullback and continuation pattern, and right now it has started to break out again. At 9:29 a.m. this morning, it has a breakout. So which means that this particular point of time is your entry level. So it might be this 147, it might be after that 144, 145 level. So this will be the range at your entry level. But again, when you are buying at this range of entry level, you are already in the money. Okay, you are already in the money. And based on the daily chart itself, it's even better, because all these are telling you that it has an uptrend potential. Okay, if you look at the previous point here, whereby they have a resistance, and resistance is having around this 1 ringgit 30 cents level, it has broken out, it has pulled back towards that level and rebounded off. So it is telling you that the breakout, pullback and continuation pattern is genuine and volume is in. So that's why we can still expect more upside towards KGB. And from this point, I think 150 is not a very far-fetched target. It's very nearby. And the next few targets will be located around the 1 ringgit 60 cent or even 1 ringgit 70 cents level. So that depends on what is happening in the market right now. So this KGB is not really it's not really directly in the technology counter, but they are supplying this ultra high purity gas towards the technology segment. So it has to be on par with the PE multiple of technology counters for the time being. So as long as their demand in technology sectors, they are also need they also need to produce the gas to the technology companies. So that is why they are tagging along with the China trend. So okay, someone said that the chart is too small. Is this good enough? Can you see that? Okay, I believe that I have adjusted the chart, so hopefully that it is big enough and you can see clearly. If you can see clearly, please give me a yes. Let me check again. Can you see clearly? Okay, hold on a second. Okay, great. So the whole idea here, let me get back to the So the whole idea here is because technology sector is on the run, is on a very strong uptrend move, and therefore we are looking into certain counters, which is one of them is KGB, and that is providing us with some good opportunity to target higher upside. And we have a fundamental coverage on this, although we are saying a whole call on the counter, but it can also outrun our fundamental fair value target. So our next potential target is around 150 and 160. So overall chart pattern here is very decent, and they are still very far from the technology peers. So I believe that there are still a lot of opportunities in KGB. But what about Amylus? Let's see how does it perform. Okay, this morning is just breakout and then it just moves sideways. But I'm not too worried about this. It is still in a pullback formation. It has a higher low formation here, and we shall monitor for an upside potential from this point onwards. So this is forming the sort of a small triangle pattern. We are going to monitor whether does it break out. Volume is still quite thin, but that is good, which means that it is telling us that not many people are selling off the shares, and people are looking into further upside for this. Definitely, if there is a breakout of confirmation breakout above this level of 1 ringgit level, that will give us an opportunity to target the near term is around 104 and then short and medium term target would be around 104 towards 109 level. So this is the whole idea here. We try to minimize our risk by looking at the base formation or the support range of certain chart, and that should give us an opportunity in the stock market. Okay, so these are some of the ideas. Okay, before you go into the next section to identify other than what are other counters that we can actually look into besides the 8 counters that we have provided every day. So please share this video out so that you are eligible to ask a question later on. If you have a sharer tag on top of your name, and once you have give your questions, then I will take your questions at the end of this session, and that will be near towards 1 p.m. and we will take your questions from that point onwards. Okay, so let's move on to the next section that I want to discuss about traders list, because a lot of times you say that, hey Louis, you are providing just 8 stocks, but what if those days the 8 stocks didn't trigger anything, or it triggered but it was very short-lived rally? What can you do about looking for new ideas? So definitely you can look into traders list, because traders list is what we have provided daily, but we compile it over the past 7 days. We put into the traders list so that it would trigger us just in case it pop up in the next few days again. So for instance, I just now noticed that Opcom was being flagged as one of the signal this morning. So that gives us an opportunity to straight away enter the Opcom straight away at the start of the day, which is near towards 57 cents. And before the end of the first session, if you look into it clearly, 10:28 and also 12:23, there are new signals coming out. So these are the areas. So 9 a.m. in the morning will be the first signal. Then 10:30 will be another signal, and then 12:23 another signal. So basically, if you are running out of ideas, what can you do here is to try to look into traders list as well to see whether traders list is giving you any signals or not. Okay, if yes, then perhaps you are able to tap along with all these signals and trade a very good rally. Okay, this morning was a very good rally for Opcom, and I believe this counter it could be related to other some of the counters such as BSL Corp and also Rubberex, and some of the shareholders are similar names. Okay, having similar names. So that is the whole idea here. So if you are running out of ideas, right, what you can do here is you can quickly screen through some of our traders list stocks and see whether is there any potential. Okay, even some counters like Pensoni also give you an opportunity, but it was quite short-lived. The trading signal came in here, which is near towards the 79-80 cents level, and it went up towards 82.5. There are 3 cents or around six ticks for you to take profit here, and I would say that this is a very good on time breakout, and also a signal. A very on point signal for you to enter, and you can exit with a good profit. Okay. So if you have any questions, you just put in your questions and make sure you have shared this video out so that you are eligible to get my review at the end of the session. Okay. Before we go into that section, we also want to discuss about some of the triggered stocks today. So I can see that M Cement is also being triggered. So if you notice Malayan Cement, this counter is actually related. Is a proxy towards construction sector. So construction is definitely on a move because most of the states are going into phase 2, and that would bring a lot of construction activities moving forward. And when construction activities are rolling, then people will start to buy cement, people will start to buy steel related products, and all these sectors will boom again. So that is why Malayan Cement this morning has given us a chance around 9:25 in the morning. This is the range, and it has started to break out higher and towards the 3 ringgit zone. But I would say that in terms of the building material segment, there are still a long way to go. Okay, like Malayan Cement, if right now in the budget moving forward, and especially during this period of time, is very attractive for you to go into construction, because they're the laggards during 2020, and those are being bashed down right now can restart their operations. That would benefit under the phase 2 recovery. And also, don't forget, if budget are going to put in more effort to stimulate the economy by giving out more of this infrastructure projects, then certainly the construction sector will boom again moving forward into the October month. Okay, so that is where you need to identify which are the sectors that really will benefit out of this scenario and situation. So, for instance, if you notice this during mid of August, it has rallied towards the start of the week, and this has been a very good run. It needs some breather, so that right now it is taking a breather. But overall trend in this particular point of time is already turning into positive region, because the EMAs and also moving average are turning into positive region. So any pullback from this point, I would say that it could be an opportunity to look out for shares to buy into them and anticipate the domestic expenditure to continue even moving into October month. And because during this COVID pandemic era, a lot of things are unable to restart, and especially those services like aviation, they can't really restart. So what you can actually anticipate is just domestic catalysts. So domestic catalysts, you can look into domestic expenditure, which is construction sectors, infrastructure plays. So these are the things that will trigger people to think about how can they restart. Or you can say that government would want to restart the economy, but how? Definitely is by doing this infrastructure activities. So try to look into infra works activities counters, and those counters can also relate back to this building material. Building materials can be either steel, metal related, aluminum related, or they can be cement related. So these are some of the ideas here. And other than that, I want to also talk about freight management, freight holdings, Berhad. I think freight holdings, Berhad, is very interesting because in my view, at this current point of time, there is a lot of shortages of these containers. And right now, they even said that they can't find containers. So what they do is they do the break bulk method. So they ship by smaller pieces, and instead of they can't find containers, they might as well go for another alternative. So which means that the whole industry right now is in a very severe disruption. I would say that it is because of COVID pandemic, and that's why it has triggered so many ports shut down, and a lot of ships unable to offload and load up their stuff during this period of time. And I would say that this could benefit this shipping industry in a at least, I would say, at least for another 2 quarters. And a lot of shipping experts are saying that it might also go into 2022 and also 2023. Depends on the situation of COVID right now. Recovery team play is that people will buy more stuff using shipping orders, and they are rarely, they buy from everywhere. Some may buy from China, some may buy from Korea, Japan, all these places. So I would say that shipping industry right now, it's in a backlog situation. It's having disruption. People are saying that it might go on for a long period of time. I would say that 6 months. And if you look into the shipping industry, just now I've captured one of the wait a second. So I think just now I've seen some of the charts to say that the charter rates are into high, so very, very high position. So let's look at BDI, Baltic Dry Index. Let's see where is it about. So if you notice, this Baltic Dry Index is refer to what Maybach is actually using. And if you check the let's say monthly chart, okay. So this is where it is right now. Okay, this is where it is in 2010, 2008. So what happened here is it has broken above this level of 2010. So which means that it is at 11-year high, And that is telling us that shipping, charter rates, everything is in a high demand mode, and that's why you can see that the Baltic Dry Index is in a elevated manner, and that should be helping all this shipping industry. So that is why I would recommend you to look at freight forwarders like Freight Management Holding. So this is part of our stock picks earlier on, and it has fallen into the traders list, and right now it has been just starting to break out. Okay, so I'm not saying that it should continue to break out higher by next session, which is after 2:30 p.m. But the odds are with you. Okay, the odds are with you. It's very favorable that 82 cents will be the support, and the resistance will be around the 93.5. And bear in mind, a lot of this shipping industry are at an all-time high in terms of the charter rate, shipping rates, whatever it is, and we should be looking very good in terms of the shipping industry moving forward. So try to take a look at also Maybach. I think Maybach is also near towards their recent high, but it still haven't break out yet, but it's okay. I would say that this is just starting point for them to trade even higher. So if you notice this, what happened when it was during 2011? Let's see whether our charts can bring us back to 2011. Okay, 2011, yes, it can bring us back there. So this is 2013, 2011 is here. So during 2011, 2010, 2011, it is at this range of price. So you can roughly expect maybe this round, if it is already trading at this range here. So you can actually anticipate the current range is still very low, and you can see that a lot of volumes has been picking up around this level here, and this is just the start. Okay, this is just the start, and you can see a lot of wicks shadows around here, and here and here. So if this week or this month they can cross above this 74, 85, 74 to 80 cents level, that is telling you that hey, this Louis, this is a very good trade. You have to take it. Okay, so this could be a double V or W shape formation. This is the neckline here, and then waiting for the breakout. Boom, then it should go. Okay, and based on near-term target, maybe you can look at 42 cents range from this point, which is near towards 124. I would say that even they give me around 1 ringgit level, I would say that is a very very good trade already. But if they can continue to search even higher towards any additional 20 cents or 40 cents, I would say that is even better. Okay, so for that, and the other range that you're supposed to look at will be around this, and that would target around 140. So I would say that if you're taking it on the longest term scale, 74 cents could be your buying in region, and next target will be around 1 ringgit, and followed by 120 and also 140. So these are the range that I would expect in the mid to long run. You should perform in that manner. And a lot of stats are backing up in this situation. So I would say that the odds are in favor, and you should be trying to pinpoint and buy at least a portion. I wouldn't say you have to all in, but you just buy a little bit to get a hang of the this shipping industry, at least for the time being. Okay, so there are questions about Maybach. I've answered this very clearly. So I will go through those that have shared out, and also those have shared out. You are eligible to ask a question, and that we will take the questions. Okay, from now I will take the questions. Okay, so VNEX, I think VNEX has been in a hot topic recently because of the MATC related investigation. I try not to put too much effort on to understanding what is the outcome of that, but certainly it is still hovering within this sort of a triangle formation, and still unable to move out of this range yet. But it is getting smaller and smaller, so I would say that it is a very decent move right now, hovering near to the bottom face of the triangle. And if there is a good move of a breakout of 74, 75 cents, then I would just target the near term phase, which is around the 82 cents level. Okay, so that would be the whole idea about the next overall chart pattern. We are still saying that this is a consolidation phase. They are still at a lower risk section, so you can anticipate the potential rebound rally from this point to target around 82 cents level. That I would think that is a good sufficient run for this round. Okay, next we go to MYEG. So today I think it's a bonus, and it has came down towards this level. Today's reference price was 97 cents, so right now it's closing at 96 cents, so it is still pullback formation. So I would say that it is still not so exciting until it can break out above the 1 ringgit level, which is the I would say that 1 ringgit is still the resistance, and we have to monitor for that. So I can't really give you a good identification of where is support, but based on if 183, I would say that roughly one for one bonus, that would be around 91 cents level. So that would be the range that it is having a support. And resistance wise, it will be 2 ringgit in a pre-bonus level, so it will be around 1 ringgit zone. So that is the idea about MyEG. But overall, MyEG is tied very closely with the government, and they are partly government services solutions provider. So that would give them an advantage. So despite whoever is going to win as the next government, they are always good to hang on to, because they are sort of very sticky, and government can't really swap them out easily. It will be a very tedious effort to swap them out. So I guess MYG has that kind of ability to hang on in the government service. Okay. Other than that, Pelican, let's check it out. Pelican, not really that interesting yet, but again, it has started to have some rebound. So I'll just give some brief commentary. Right now, uptrend in tech position has been continued since this part of the day, and this is sort of a very strong support. It has having some minor breakout, but it is not accompanied by volume. So volume wise is still soft, but I would just say that in the near term, it might just retest the 48 cents level, and that's about it. So I don't see any strong movements yet, unless today's volume is high and has a breakout or sort of closing near towards the 47, 48 cents level. Then it would be a very interesting point to take note and to target 51.5 cents level. Okay. So other than that, FPI, I think need not to say much. All these EMS players and tech players are still on a very good run. Just that today there is profit taking activities. So this run, I guess that you should not chase even further. This could be a turning point, and if it is breaking below the lowest point of this 2 bar, I would just stay away. Okay, stay away from this counter, because if it is falling below the 4 ringgit and 10 cents level, that will not be turning good for the FPI right now. Even today itself is considered as a overbought position, and people are likely to see further sell down. Okay, so next support that I'm looking at would be around 3 ringgit 80 cents. Okay, so this is FPI. Frontcan, let's check out Frontcan. I think Frontcan could be benefiting from this Apple online conference on 15. So let's see how does it impact them. If there is new iPhone coming out, then certainly Frontcan would be suitable for you to trade even into higher position. That is just one of the catalysts, because every time they come up with new iPhone, Frontcan would benefit in terms of share price and in terms of their earnings. Right now, it's very interesting because there are a lot of spikes near towards this level here. The spike 1, the spike 2, and also spike 3, and also 4. So if after these 4 times they are unable still to surpass this level here, then it will be quite worrying. Okay, it will be quite worrying. And if even moreover, if it is falling below the 350 level, that is telling us that you should be selling off the shares, because normally when it cannot sustain above 350, then it should collapse from that point. So this is one incident, two incident. This is the third time, or you can say third and fourth, it will be together. So you have to monitor the 3 ringgit 50 cents level. Once it is broken, then we shall avoid this counter. But for the time being, they are still riding along the Apple's related trend, and therefore we should be monitoring from this point. Okay, just now I've mentioned Opcom. Maybe we can talk about Anju. Anju is related to building material segment, uptrend position still, and support is located around the 2 ringgit and 73 cents. Resistance first one is around 295, followed by 318. So it is still trending higher. I would say that this could be the next up leg, but it might just retest the previous high of 318, but it shouldn't. I mean, based on the indicators wise, it shouldn't go above 318. So that is just a brief technical analysis reading on Anju. Okay, and then I think a lot of news out there, a lot of rumors out there. I think I need not to say much. And this is very volatile towards the recent part of the day. But definitely when volatility starts to slow down further into this pattern here, then we might want to wait for a good sideways consolidation breakout. But for now, I would just say that I will avoid this counter because it has rallied since 18 cents towards 32 cents. It has given us a very strong sell down phase here, and the volatility starts. So it is not really a good timing to go in until the chart is, or the candlesticks are turning smaller, and we are going to wait for breakout above this trend line here. So let's monitor how does it pan out over the next couple of weeks, and that will give us an idea of where we should be entering. But for the time being, I think the positive momentum is sort of disappearing, and we should monitor for a good sideways consolidation phase before another run up. Okay, so this is just on KNM. Genetec, a lot of people are asking Genetec because they're still uptrending. There is no issue here if it is still able to being supported above the 30 ringgit level. We should be seeing upside towards at least 30, 35, 40, or even 50. I'm not surprised if they can reach 50 because the share base is very low, and people are still banking on this related to EV kind of demand or catalyst. So that is why Genetec still has a chance to move higher. So the near-term support is 30.91, and if it is falling below that level, then you have to cut loss, or you can time for another entry. Where is the better entry to look out for? It will be near towards the red color line here. So the red color line is around 29 to 29 ringgit level. If it's falling back, it should be forming something like similar like this. You pull back and rebound off. Okay, so hopefully that you can pull back and then rebound off. So that is the whole idea of Genetec. So far, it is still hovering and respecting all these trend lines, this moving average. So I would believe that uptrend is still intact, and you should be monitoring for perhaps 35, 40, or even 45, 50. Okay. So other than that, we have talked about some related counters like Kobe, White Tech, High Tech. So I'll talk about this range of counters here. So sideways ranging mode right now, still uptrend tech position, and Kobe likely to retest the previous high around 570 cents. Bear in mind, this is still respecting the moving average of 20, and that is still considered as a very good chance to even surge even higher. I think some other brokers give this counter a target around 7 ringgit 20 cents. So I think you can monitor for this as a good flag formation breakout, and that should give you an advantage of entry. And then support range will be around the EMA 20, which is near towards 509. Okay, anything below 509 you should be cutting, and next target will be around the 6 ringgit zone for Kobe. Okay, I'll go into high tech because it is related. So I'll just take another 5 more questions, although I see a lot of people are still asking. Thank you for your share, thank you for your likes, and we'll continue with another 5 more questions before we end this session. So high tech is also an uptrending position. This is even much stronger if you compare to Kobe. And what we see here is that it is hovering along this EMA 5. It has broken out above the previous high here. So breakout, pullback, and continuation pattern above this level here. Still maintaining the uptrend above the 2 ringgit and 27 cents level. So this is still very positive. So what we are going to monitor here is definitely the 250 level. Once it is able to cross above that level, certainly is giving us an opportunity to add on to a position. And our next target maybe is around 2 ringgit and 75 towards 3 ringgit level. That is just a technical analysis point of view. Because of you can see that all this while it has been very strong. So this can be used into projecting the next target. So if you use that analysis, the first wave, pullback wave, then second wave, then this 3 ringgit level will be your next level of target. So it is very similar here. So I guess you can use something like this to project your target for high tech. Okay, and great tech. Since seems like we are heading towards the tech companies, so great tech should be part of the EV related counters. This counter, okay, this is not what we are supposed to monitor or look for, because it has sort of a rally and it has sort of a pullback, but unable to sustain above the EMA 20 level. So this can be considered as a consolidation phase, and then likely to pull back even further towards perhaps the teal, the moving average green line here, which is near towards the 6 ringgit and 70 cents level. Let's see whether can they rebound higher. So I would assume that it should be having something like this. Then it pull back towards the this green line here, hover sideways, and then hopefully that rebounds higher. So this might be doing something like this pattern early on, and hopefully that it can rebound above the moving average of 50, and then hopefully that it should restart again the new uptrend. Okay, from that point. So this is on the great tech chart, but I believe that right now it's on a negative bias tone. And if you are really having some good trading opportunities, I think it should be around 6 ringgit and 37 cents to 6 ringgit and 52 cents to pick up the shares around this level here. That might be a good choice. If you're already picking up around this level, which means that it might be already below the SMA 50 level, then that is where you have to really take note of where you should be cutting loss if you are taking at the this price range. But if you are having a good rebound above all these levels here, then your next target will be around the 7 ringgit and 63 cents level for great tech. So I will take another 3 more questions. Kawan is the frozen food company under the consumer sector, and perhaps that the consumer sector right now it's on a much flattish tone, and frozen foods are still in high demand, but it's not as high as during when the COVID started. Right now, people can still really buy fresh foods from the supermarket, so people are still people might be reducing the demand or the quantities that they are buying for frozen food. So what I'm saying here is that it might continue to trend in a very flattish tone, near towards 170 towards the 2 ringgit and 17 cents level for the next couple of weeks or months. It shouldn't have a lot of strong impetus to surge above 2 ringgit and 17 cents anymore from this point. I would say that the current trend is heading downwards or heading sideways. So it's a sideways to negative bias trading tone for Kawan. Okay. So last 2 counter, I'll take it in the building material segment is LB Alum and also CMSB. So LB Alum, I think aluminum prices are still high. If you take note of this aluminum price. The aluminum price is at since 2015. I only have data until 2015, so this is quite high-ish. From last March, 1,400 right now is almost double. So which means that people are producing this metal related. They are still I think selling at a very very decent and very luxury price, and therefore LB Alum might be able to perhaps get more earnings in the future quarterly results. So what can we say from the chart right now is definitely there is a breakout above 63.5 cents. Uptrend is still intact. And the next target or next support level that we are looking at will be around the 65.5 cents. Target is around 75.5 cents. So I would say that there is still a very good amount of chance that people are looking at this LBLM and targeting around 75.5 cents for near term. And the catalyst is still based on the aluminum price. Okay, so this is the idea about aluminum price. It is at all-time high and or near term very strong position, and people will still buy into the aluminum counters for the time being. Okay, so last counter for today is CMSB. So CMSB has been running up higher and higher, and this was during after the political event that we have in Malaysia. So it has been rallying since then. It is also considered under the construction sector. So right now it is just pulling back. I would say that this part of the time it is more towards a pullback consolidation phase. So we should monitor the range around the 1 ringgit and 22 cents level. And that would be the price range that I would say that it's fair for the consolidation phase to come back and rebound from this point. So next target or next resistance that we are going to monitor will be 1 ringgit and 44 cents. So if you're buying along this range of 1 ringgit and 22 cents level, then your next support or your next resistance will be around 1 ringgit and 44 cents level. So that would be the idea behind CMSB. But overall trend, it has been turning into a positive region. So downtrend and then sideways ranging mode, form a double bottom formation, breakout above 122, and then next target should be 144. So I see a good potential, good up run from this point onwards, and this range of 1 ringgit and 56 cents would be the next potential target if there is any. But for the time being, I think it is turning into a positive mode, so you can actually buy on dips from this point onwards. Okay, so I guess it is already 1:20. I've gone a bit far from all these questions, and I guess you have taken some of the ideas about what we should be doing in the market today. Today we should be slightly more defensive, but you can position yourself into recovery plays and also try to position yourself into technology counters. So these are some of the options that you can actually choose for the buying in dips, buying on dips. I think right now it's really buying on dips is makes sense because after the earnings reporting season in August, right now people are taking a breather and people are looking forward towards the 12th Malaysia plan and also looking forward to the budget, which is in October. That will give a lot of impetus and a lot of policies will be crafted out, and that should bring up more opportunities in the stock market by then. So right now is the position for that to happen, and hopefully that November reporting season is a much better month. So this would be the dips that you are going to accumulate, and then you are going to sell into October and also November. Okay, so that is how you are going to do with it in the stock market for today. So thank you so much. Thank you for the time for tuning in. Thank you for your likes and thank you for your sharing of this sharing this video out to your friends and in your group of circle. Okay, so thank you so much and see you again next week. Bye bye.